In this lecture, I'll show you how to calculate sinking fund factor and also explain you the use of sinking fund factor in personal finance and wealth management. Assuming that in 10 years you want to start a business of your own and for which you required rupees 25 lakhs. And to accumulate this 25 lakhs, you wish to deposit certain amount in a bank which pays you a 10% rate of interest. So now the point is that how much of amount you need to deposit each year in this account so that at the end of the 10th year you will have 25 lakhs of amount with you so that you can start your business. In such scenario, you can use the sinking fund factor. In another example, suppose if you want to retire with a savings of 50 lakhs in your account, then how much of amount you need to save in your provident fund account every month so that on retirement you will have the required amount with you. In that case also you can use the sinking fund factor. Now I'll show you how to calculate the sinking fund factor. Here is an example of sinking fund factor in a personal finance. Now first I'll explain you the formula of sinking fund factor. So sinking fund factor of given interest rate for a given time period, this equals to I upon 1 plus I to the power of n minus 1. So this minus 1 is in the denominator only. So in a given example, it is a 5-year recurring deposit. So your n equals to 5 and a bank which pays 8.25% interest compounded annually. Now we'll substitute this in our equation. So this equals to, our I is 0.0825. Then 1 plus I is 1.0825 to the power of n is 5 minus 1. So first we calculate the denominator value. That is 1.0825 raised to the power of 5. 1.4864. Then this minus 1. 1.4864 minus 1. So your denominator value is 0.4864. Then this equals to 0.0825 upon 0.4864. This gives us 0.0825 upon 0.4864. So 0.1696 is your sinking fund factor. Your sinking fund factor of 0.0825 and 5 years. This equals to 0.1696. Now once you calculate the sinking fund factor, using this you can calculate your savings. Suppose if you desire to have rupees 5 lakhs at the end of the 5th year, how much do you need to save each year? So already you have a sinking fund factor here. Then simply multiply your future value amount with sinking fund factor. So to get your payment or saving, how much amount to be saved, this equals to future value times sinking fund factor. So your future value required is 5 lakhs and your sinking fund factor is 0.1696. So this gives you 5 lakhs times 0.1696. So 84,800. That is your payment or saving per year should be 84,800 rupees. So that at the end of the 5th year you will have 5 lakhs with you. Now we see how much amount you are saving in 5 years. So this is 84,800 times 5. From your pocket you will save 4,24,000. And what is the interest that you earned is 5 lakhs is the total amount that the bank going to pay you minus your deposit amount. So 76,000 rupees is the interest that you earn on this account. You can use sinking fund factor to determine how much payment you have to make or how much money you have to save. Then with the help of that you can also know how much interest that you earn on this particular saving. Thank you.